Good afternoon, and welcome to the end of week market review for Friday, April 26, 2013. There's a few things that we're going to be covering off today. We're going to start off by taking a look at the market news. Here we're going to be looking at the US markets as well as the global markets. We're going to be diving in and taking a look at some of our economic reports. Once we've done this, we're going to go ahead and take a look at some technical analysis charts. While we're doing that, we'll be looking at both the S&P 500 as well as the Toronto Stock Exchange. We'll be looking at charts for both the daily charts and the weekly charts. When we look at our weekly charts, we'll be looking at short-term and long-term. We're then going to go ahead and take a look at our volatility indicator, see what's been going on with that, and see how it's been affecting the overall market conditions. And we'll finish things off by taking a look at one of our great picks. So we could see that the markets did end the week up. This was after some mixed trading throughout the middle of the week and poor trading near the beginning of the week. All in all, though, the Dow Jones is up 1.13%, and with the S&P 500 up 1.74%. Most of our gains came from positive earnings, as well as better than expected jobless reports. Though we are also going to be able to realize that a lot of the losses that we had, a lot of the negativity, came from earnings as well. So right now, with earnings being the number one bellwether in the markets, you're going to see that that will be our number one influence over the next couple of weeks. When we take a look at oil, we can see that it's down 3.37% from last week's close. Currently is at $88 per barrel. When you look up at silver, you see that it's up 3.19% from last week's close. This now puts it to $23.97 per ounce. Gold is up 3.81% from last week's close. This puts it to $1,399.70 per ounce. And finally, our US Canadian pair is down 0.94%. This puts it at 1.0171 pips. Right now we're looking at the economic reports. We could see that we are expecting about 355,000 jobless claims. In fact, we only had 339,000. So because this was substantially less, we definitely ended up seeing some positive trading in the markets near the end of the week. And right now we're looking at the S&P 500 on the daily chart. You're going to see that we've been approaching overhead resistance, which is at a previous cycle high here from the middle of April. That's around 1595. Now during this week, we've seen the MACD go from flat or even declining bearish all the way back up to a rising bullish sentiment. So it's definitely good to see. If we keep up with this, we could see the breakthrough and back into and beyond 1600s. It's important to note, though, that this is the first dip that we've had in quite a while. The last time we had a dip like this was somewhere around the end of February. We don't need to be too concerned, though, because as you can see, things definitely worked themselves up despite. And here we're looking at the S&P 500 on a weekly chart. You're going to see about 1 year worth of candles here. You can see that we've got a good, strong, significant level of support that's been dating back throughout the month of March and April. This is around 1550. And here we're looking at the S&P 500 on a 5-year chart. Each of these candles still represents 1 week. You can see that we are really at some all-time highs. What's going to be interesting, though, is that as we carry on and we have several more months, you're going to see that these large dip that we've had prior to 2009 is going to be out of the chart. And we will basically have had a strong bullish rally for 5 years. So that's a little bit more of a 1-year goal. It seems like we've gotten 4 years of strong rally here. But you can see that although we do have dips and although we do have times where the markets aren't looking very favorable, all in all, the markets are very, very strong. Right now we're looking at the TSX, and you're going to see that it's right up against some overhead resistance. It seemed to have found that yesterday and is now pulled back today. If we continue the decline like we've had, we could see lows work itself down even lower than a cycle low from here in November. Right now the MACD is rising bearish and with the black line over top of the blue line. Although that's good to see, it's not bullish yet, which means that we could continue to have problems with this overhead resistance. Looking at the TSX on a weekly chart, you'll see about 1 year worth of data. You can see that we've got some significant support around 11,750. We're hoping that we'll continue to see support there and that we'll see the TSX start to rally up. But when you look at the TSX on a 5-year chart, you're going to see that there really has been quite the struggle, and we haven't been trading nearly as strong or as positive as the US markets have. And finally, if you take a look at the volatility indicator, you're going to see that it's currently at 13.61. This means that it's down 9.08% from last week's close. Right now, it seems to be spending most of its time between 12 and 14. You can see this to be true throughout most of January and February, and again most of March and April. So although we've had a couple of rises and spikes where the indicator has gone up much higher, all in all, the markets have been very good and very stable. We're going to be doing our best to see that this volatility indicator continues to trade as such. If you have any questions, make sure that you contact us either through email or our phone number, both of which are listed on the screen. And as per usual, make sure that whenever you're trading, you're always exercising caution. Any trading decisions that you make are your own. So make sure that you've got your entry prices and exit prices before you get into that trade. This has been the end of week market review for Friday, April 26, 2013. Ciao for now.